Luna has become the talk of the town recently with its crash of over 99%, from its all-time high of around $119 to below 50 cents. This not only has people talking, but yet again the trust in the crypto market has been lifted and people are trying to save as much as they can, opposite to what projects want them to do. But that's not why we're here exactly. Let's go over the events and causes one by one as to why Luna fell, what caused such a crash dump of the entire market, and will it ever be able to come back to its prime, or will people be able to trust the project again? Let's find out after this. Quickly, I just want to say that making videos is not an easy task, and we give it our best to make them great for you. Any subs, likes, and comments from you guys will be appreciated. That being said, let's dive in. So, what caused Luna to crash in the first place? The main reason why the currency fell to its all-time low was because of its like to Terra USD, or UST, which is a stablecoin, and like every other stablecoin pegged to the US dollar, all stablecoins are linked to traditional or fiat currencies. UST was decoupled from the dollar in the last week, which sent its value and pricing tumbling down through the floor. Luna had a market cap of $40 billion, which dropped to just a tiny bit over $200 million. This led to the leading crypto exchange Binance to temporarily suspend the withdrawals on Luna. The collapse came due to a general downward trend of the crypto market, which made many top players lose a quarter of their value in just 24 hours. Binance temporarily suspended withdrawals on Luna last week. Let's understand what UST is first, besides being a stablecoin, before we move on to the rather serious part of the discussion. UST relies on another token, Luna, to keep its price of $1 via a set of on-chain mint and burn mechanisms. Recently, Quan also made the headlines for using Luna to buy Bitcoin and cryptocurrencies to partially back the coin. That has been framed as a way to secure UST's peg while maintaining decentralization. But the central role of Quan and Terraform Labs is buying Bitcoin has fueled claims that Terra is centralized. Thus far, there is no concrete link between UST and its BTC AVAX reserves, which led to questions on Saturday around if or how the currencies could have been deployed to defend UST's peg. During this most recent event, the reserves have so far gone untouched. Coming back to the recent turn of events, the depegging was the apparent reason which initiated a series of major withdrawals from Anchor Protocol. Anchor is a lending market that offers high yields for depositing UST. A week ago, the total UST deposits fell from $14 billion to $11.2 billion. To get a scale of the event, the total supply of UST is 18 billion. That was not all. Large volumes of UST were withdrawn from liquidity pools on Curve, a DeFi platform that allows users to swap between stablecoin like UST. A $150 million liquidity withdrawal came from Terra creators, Terraform Labs, which claimed Sunday that it made the withdrawal as it was preparing to shuffle around funds between pools. But it redeposited $100 million after realizing UST had begun to trade a discount relative to other stablecoins. Adding to the injury, a single wallet also raised suspensions for dumping $84 million worth of UST on the Ether blockchain and $108 million on Binance Exchange. This led to calls from Terra community that depeg was a well-thought-out plan. Do Kwon, the founder of Terraform Labs, jumped in with a series of jokes and jabs at Anon circulating fear, uncertainty, and doubts. At one point, Kwon tweeted out a chart with the claim that one wallet was responsible for 62% of Anchor withdrawals. He quickly deleted the tweet, presumably after realizing that the 62% figure on his chart referred to all other wallets rather than one specific wallet. After Kwon started tweeting on Saturday, a single wallet appeared to be intent on rescuing UST's peg. In the span of around 10 minutes, the wallet swapped over 200 million of UST for Tether in order to rebalance UST's curve pools thereby boosting its price. More swaps continued on Sunday morning as UST's peg recovered. Some have speculated that the Savior wallet belongs to Jump Crypto, a financial firm with strong ties to Terra and Terraform Labs. Jump is the same firm that stepped in to backstop a $320 million exploit of Solana's wormhole bridge back in February. Of course, the market has always been volatile and the nature will never change, so make sure you do your own research and have a clear understanding before you put down your money in crypto, or any investment scheme for that matter. With that, we've come to an end for this video. Make sure to share your remarks below, leave a like on this video, and do subscribe for more coming to the channel very soon.